Ever wondered how global conflicts can affect your investments? Today, we delve into this intriguing topic, exploring the various investment options during such times. We'll assess the potential for both profit and loss, helping you make informed decisions. Our inaugural segment immerses us in the intricacies of the stock market, which is often seen as a prime investment choice. One cannot overlook that global conflicts cast an extensive shadow over stock prices and market volatility, transcending geographical boundaries. For instance, let's navigate the American market where defense stocks, say Lockheed Martin or Northrop Grumman, may experience a surge during turbulent times. Simultaneously, tourism-oriented stocks like Carnival Cruise or United Airlines might grapple with obstacles. Veering towards India, we observe that giants like Bharat Electronics Limited, a linchpin in the defense industry, could undergo similar alterations. Moving further east to China, defense stocks aircraft company might be positively impacted. Swinging over to Europe, we find companies akin to BAE Systems, a stalwart in the European defense industry, possibly witnessing a stock price escalation. On the flip side, stocks centered around tourism, for instance, Intercontinental Hotels, UK, or Make My Trip, India, could run into headwinds. Regardless of whether we are witnessing defense stocks prospering or tourism stocks weathering the storm, the fluid dynamics of the stock market, be it American, Indian, Chinese, or European, is brilliantly illuminated during periods of global conflict. In this second segment, we plunge into the global world of bonds and treasuries, giving due attention to examples from the USA, India, China, and Europe. Notably, U.S. Treasury bonds and municipal bonds from the USA are frequently regarded as safer havens for investments during periods of global conflicts and uncertainty. Meanwhile, Indian government securities, G-SECs, Chinese government bonds and European central bank bonds also draw considerable attention as secure investment options during tumultuous times. Though these are considered safe, it's crucial to remember their potential for lower returns compared to other investment avenues. For instance, U.S. Treasury bonds, backed by the full faith and credit of the U.S. government, have traditionally been a go-to safety investment during times of international conflict. Similarly, municipal bonds, backed by local and state governments, also offer a degree of security. Likewise, G-SECs from India, backed by the Indian government, Chinese government bonds, underwritten by the Chinese government, and bonds issued by the European Central Bank, are considered sturdy. However, the return on these investments may be lower in contrast to other high-risk options. Segment 3 navigates through the vast terrain of real estate investments across the globe. Global conflicts invariably impact market dynamics and property values, but certain markets around the world illustrate remarkable resilience. For instance, the high-end condo market in Manhattan, New York, USA, with its continuous demand, stands as an epitome of endurance. Down to the east in India, the burgeoning IT hubs have kept the real estate sector alive amidst varying geopolitical issues. The story is different yet inspiring in China, where government policies and urban development projects keep the property market vibrant, regardless of international disputes. Over in Europe, London's bustling commercial real estate market overcomes all challenges, proving the strength and adaptability of the European property sector. Each of these instances underscores the enduring potential of real estate investments, revealing their significance in the face of all odds. Segment 4 shines a light on the world of precious metals. Predominantly, gold and silver, in addition to platinum and palladium, regularly secure the position of safe haven investments amidst eras of geopolitical unrest. A typical instance would be the surge in gold prices in the USA during political conflicts like the Iraq War in 2003. Another example can be observed in India and China, two major global consumers of gold, where prices of the yellow metal generally increase due to economic uncertainties during times of world tensions. The European market also shows a similar pattern, with the prices of silver remarkably rising during the Greek debt crisis. However, it's vital to keep in mind that while such scenarios provide a potential opportunity for profit, the risks tied in with price fluctuations are omnipresent. Segment 5 emphasizes on a diverse range of cryptocurrencies including globally recognized Bitcoin, Ethereum, Ripple, and those gaining popularity in specific regions such as Litecoin in the USA, Matic in India, NEO in China, and Cardano in Europe. These decentralized investment options are susceptible to the ripple effects of international conflicts. For instance, Bitcoin and Ethereum have shown high volatility during global conflicts, swinging dramatically in value. Similarly, the value of Litecoin in the USA, Matic in India, NEO in China, and Cardano in Europe has also shown a propensity to fluctuate during periods of global unrest. This high volatility metamorphoses these digital assets into high-risk, high-reward options, setting up scenarios where investors could reap substantial gains or face significant losses. In this segment, we'll be exploring the sphere of oil and energy stocks around the globe, focusing primarily on key players like ExxonMobil and Chevron from the United States, Reliance Industries from India, PetroChina from China, and BP from Europe. The fluctuation in these stocks is impacted heavily by global conflicts. For instance, geopolitical tensions can lead to significant shifts in oil and energy prices, directly affecting the market behavior of these stocks. This presents a dual-edged sword of potential profit and risks for energy investments, including ones like Royal Dutch Shell and Total SA. It's crucial to note that these titans of the industry perfectly illustrate how global dynamics can whip the winds of change in energy investments, painting a vivid picture of the interplay between world events and global business. Segment 7 delves into the diverse world of agricultural commodities, focusing on vital items such as American wheat and corn, Indian spices, Chinese rice, European dairy, and global cattle and poultry. Instances of conflicts can significantly impact the delicately balanced supply and demand of these commodities. During wartime, the U.S. might face shortages in wheat and corn supplies, while transportation of livestock might become challenging. Similarly, conflicts could lead to a scarcity of spices from India, affect the rice exports from China, and disrupt dairy production in Europe. These disruptions create investment opportunities and cause price oscillations. For instance, during conflicts, the price of these commodities might surge due to unexpected supply chain disruptions. In Segment 8, we dive deeper into the global landscape of defensive stocks, focusing on those in healthcare and utilities across the United States, India, China, and Europe. Consider, for instance, Johnson & Johnson in the U.S. healthcare sector, Reliance Industries in the Indian utilities market, Sun Pharma in the Chinese healthcare industry, or E.ON, a German company in the European utilities sector. These stocks have consistently demonstrated stability during periods of global conflict and uncertainty, offering the potential for moderate profits and serving as excellent buffers against market turbulence. From Johnson & Johnson's steady performance during the Iraq War to E.ON's resilience amidst the European debt crisis, these stocks have not only shown impressive resilience, but have also secured a safe spot in the investment world. Segment 9 delves into the world of exchange-traded funds, commonly known as ETFs, from across the globe. To give this a more tangible feel, we'll examine examples from the United States, India, China, and Europe. For instance, the Spider Gold Shares ETF from the USA and iShares Silver Trust ETF, which often gain popularity during times of global conflict due to their stability. In India, we have the Kotak Gold ETF, which behaves similarly during geopolitical tensions. The China AMC CSI 300 Index ETF from China, which contains a diversified portfolio, also tends to show resilience during times of global uncertainty. Europe's largest ETF, the iShares Core Euro Stoxx 50 UCITS ETF, provides a valuable insight into how European markets react to global unrest. These diversified investment vehicles provide exposure to an array of assets such as commodities, stocks, and bonds. The potential rewards and risks of investing in these international ETFs, especially during periods of global unrest, are certainly worth considering. Finally, Segment 10 delves into an array of government and corporate bonds from various parts of the globe. We will explore U.S. Treasury bonds, Indian government securities, Chinese government bonds, European government bonds, as well as corporate bonds from companies like Microsoft in the US, Tata Motors in India, Alibaba in China, and Volkswagen in Europe. Historically, during times of global conflicts and turmoil, these fixed-income investments have been instrumental. For instance, U.S. Treasury bonds and European government bonds have typically retained their value and provided a refuge of safety. Simultaneously, Indian government bonds and Chinese government bonds have demonstrated resilience, offering promising returns. The corporate bonds of established companies like Microsoft, Tata Motors, Alibaba, and Volkswagen have also maintained a commendable performance, playing a crucial role in diversifying portfolios, providing not just a harbor of safety but also promising income potential. In conclusion, it's clear that global conflicts present a range of investment options, each with its own potential for profit and loss. It's crucial to conduct thorough research and consider your risk tolerance before making investment decisions. Thank you for tuning in today. Don't forget to like, subscribe, and turn on notifications for more insightful content. Remember, informed decisions and adaptability are key in the ever-changing investment landscape. Until next time, stay savvy.